Aloha, this is Joshua Hayes at BigWaveTrading.com coming to you with the November 4th market wrap-up for your November 5th day. As you can see here, it's clearly obvious that the S&P 500 was very oversold as we came down here into the October lows. And the rally that we've seen in this index has brought it right back up to near the 50-day moving average. This rally coming on lower and lower and lower volume as it goes is not a market I want to go long heavily right here. There is no way I would want to be long. Instead, I would be looking for a re-entry of shorts or more sideways actions or something. But the bottom line is right now it is not time to go long. Don't chase this overbought scenario right here because look, it's coming right upon the 50-day moving average. The index has not gotten back above it for a very long time, and until it does, nobody needs to be even going long. So it's just a bad idea right now. Let's look at the Dow Jones Industrial Average. We see the exact same thing. Lower and lower and lower and lower volume, rising right up to resistance. And if it doesn't stop here, it'll stop here. You can take these points if you want. If you're a quick trader, it's not my particular style. I like to set it up and feel a little bit more secure in my investments. So right now I'm not playing the little short term. It'll be only if I have to. Here's the United States dollar index. You can see it's still strong relative to where it was in middle of 2008. Let's look at a weekly. You can see how much was taken off from the top in 2002, 2001 area. But it's nice to see it going higher again. And then let's go ahead and look at the NASDAQ. And as you can see, the same scenario. Lower and lower and lower and lower volume. It just gets smaller and smaller and smaller and smaller and smaller and smaller and smaller as it rallies into resistance. So there's just no way I would trust this rally at all. Let's look at the NASDAQ Composite. Same thing, rallying right back to the 50-day moving average resistance. Lower, 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 and lower volume compared to where it was on this rally day right here in October. It has been nothing but choppy action, basically, even though it hasn't been really choppy because 2 weeks ago it was going down, then it was going up, 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 and now it's still going up, but we are extremely overbought. So I don't know how much more further we can go, but as you can see, we could still go a little bit further. We haven't hit the 50-day moving average yet, so technically we're still just working off the oversold condition that we were in. You can see the S&P 600 was up 1% today, lagging the rest of the indexes, but still, it's still well below the 50-day moving average. There's nothing to get excited about here, and the same with the Russell 2000. It's below the 50-day moving average. It's below the 200-day moving average. It's just not the time to get excited right now. It's just nothing to do. Let's look at the VIX, see where that's at, and that's still at 47, so it's still at a relatively high level, which shows that there's still a lot of anxiety out there. The NYSE, just like the SP 500, lower, 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 as you rally into resistance. So these charts aren't too pretty right now, and that's why I'm maintaining a lot of the shorts that I have. If your stock's not above the 50 or 200-day moving average, you should no way go long it, and even if it is in this market environment, I don't think I would go long. So I'm going to go ahead and wrap this up right here. This is Joshua Hayes at BigWaveTrading.com. Aloha.